Hey, good evening, everybody. Welcome to this evening's AUDJPY Securities webinar. My name is Duncan Cooper. Tonight's webinar is a review of Forex trading patterns that may have unfolded from the previous month. So can we look at the previous month and start to work out why price moved in a certain direction? Can we see clear patterns that we could have recognized, that we could have traded? If we can see it in hindsight, can we start to see it in our foresight? So with that being said, that's tonight's topic. We'll try and stay away from what's happening in the market right now, but we'll be able to probably see what the market's doing. And some of my commentary might be about the underlying structure that was forming last month. Is it actually telling you what's happening this month as well? So that's tonight's topic. Tomorrow we've got live Forex market review. That will be following the FOMC statement earlier this morning. So we'll be able to catch up to see where price is post that event. All right, before we get into it, if you can read through the risk disclaimer, that would be great. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at AUDJPY Securities, and I'm a full-time trader. Trading the Forex market now for more than 15 years, since 2005. So what's that? About 18 years. It was January 2005. All right, so I've been trading for more than 15 years, mentoring clients from 110. And if you want to contact me, my email is there on screen. Duncan.cooper@audy.com. All right, just email me if you want to ask me anything. If you want to follow me through the week, my analysis, you get it at our website, audy.com, at the market news tab, at our YouTube channel, AUDJPY Securities Australia. You can connect with me personally on Twitter and LinkedIn there. And you can also connect with us in the week in our Telegram channel. Email Nathan to get access to that. Get access to my chart layouts and templates as well. Just email Nathan, and I'll put his details in the chat now. If you want to set up a demo account with my chart layouts and templates, just contact Nathan. Or if you want to set up a live account, just contact Nathan back. If you want to set up a demo so you can start to follow along and see where the trading's for you, first step would be a demo. And of course, have a chat with Nathan there. All right, so let's get into having a look at what the market did last month. Of course, been talking about the market all the way through the month, but it's always good to look back. And, you know, sometimes you can have a particular theme in mind that you think is going to transpire through the course of a month on a particular pair. And then when you look back, maybe that wasn't actually what was happening. And can you look back and see something that would now change your thought process? And if it does, would that then make you more profitable as you're looking at the market? So let's just start with the euro pound. Now this pair has been rather range bound. This dashed line is just telling me where the new month starts. All right. And in my commentary through the month, I've been saying it's range bound, but there's a broad range here. So this is where the new month started. Right, let me just put that line back in. There we are. All right, so coming down to the bottom of the range here at the start of the month, we have weekly support along here. We'd already held there twice. So there would be a high chance that maybe price would stop there and move back up. Now my range trade, I get a fib and I draw it across the range. If I'm trading up from the bottom, I want to make sure my fib's drawn so the 79% positioned at the bottom of the range here. Now, as an aggressive entry, I just look to trade the bottom of the range. I have an order sitting at the bottom of the range to buy, and I put my stop underneath the range at the 127R level. And as long as it's not going to move into a trend, you can move through the supports, but if you can't move into a trend, it probably won't get to the 127R. And I'm simply looking for price to trade back up to the top of the range. Now, using that strategy there, that would have worked perfectly to trade up to the top of the range. Okay. Now, if you're not confident just to trade at the bottom, put your stop below, you could also look at, what I also like to look at is getting into the market. So this was this area here, getting into the market by the 79% level so that you're potentially giving away 20% of the range, and you still have 80% of the range left to target up here. All right, so you could be, as price is moving up, buying at the 79 level here, stop below the low, targeting the top of the range. That would be another entry technique. All right, and I might just change this to a different color so it can stand out. All right. Now this pair offered you the same trade at the top. It actually offered you the same. Oh, I need to correct myself. This is not this low here, it's this low here on the 4th of April. So there's a 79% level. All right, so price that moved up to that high, then it was coming down to this support. And you could have just looked to trade at the bottom or trade when price moves back up to the 79% level. So there's a 79% level here. There was actually a number of opportunities just to trade there. Click in and put your stop below the low. All right. I can see another way of getting in. Price has this move up from support. And then there's a 4-hour 79% retracement pattern here. Could have been a buyer there. Stop below the low. All right. So a number of ways you can be getting in there. In any event, you could take the most aggressive stance at the bottom of the range, or you could be waiting for price to start to develop up from the bottom of the range. But I like to get in by the 79% level of the range. All right, so there was a trade setup there within that range, the higher time frame range. Now, if we go back to the day charts, if we're in a range, you then watch for the top to fail, to hold, to trade back down. Okay, and somebody's got the hand up. I'm not sure if that's your name, Yipple, but welcome. If you've got a question, you can just put it in the chat or you just give me a wave. All right, so there was the first opportunity, and then we came back up to the top up here. So we'll go to the 4-hour chart so we can clearly see that area. Here it is. Now, if you're trading exactly at the top of the range, we don't quite make the top of the range there, but then we do over here. So if you're trading at the top of the range to sell, there's your sell. What I would do is, I'll go to the daily chart here. I'm selling at that level. I put my stop at the 127 above the top of the range. And I'd move my fib backwards way around now. So the 79% level is drawn at the top. Because if I don't get in at the top, stop above at the 127R, then I want to know where the 79% level is, because that's my benchmark. I must be in by that point to trade down to the bottom of the range. All right. So countless opportunities. You could have just waited for price to sell down and gone, okay, I want to get in by the 79% level. So here, for sure, you could have started to say, okay, we're at the 79. We move below. If it comes back up to the 79 there, you click in, you put your stop above the tops here. If you wanted to trade a retracement style entry on that, so you fail at the top of the range there, you draw your fib in from the failure to the first drop. There's another 79% entry at the top of the range level. Stop goes above the high. And actually gives you 3 candles there to take the opportunity there before trading down. Now, we haven't actually met the bottom of the range. And if you do your work on this pair, there's actually some more support. There's more support here. So we've actually traded down to a new bottom of the range potentially. The bottom of the range is getting a little bit higher. The range itself is getting a little bit narrower. But there was at least once, twice, 2 opportunities there on that pair. So through the course of 4 trading weeks, that pair has just offered you a range that the market's trading in, and just trade it like it's a range. Have the confidence to buy at the bottom or sell at the top, okay? Or if that scares you, well, wait for a failure at support or resistance and then look for an entry as it starts to reverse. Of course, Taking the most aggressive stance works great when price reverses very strongly and maybe then doesn't look back and there is no opportunity to get in. So that's the benefit of getting in at the level. But I know a lot of traders, they don't like to do that because they're concerned that price won't stop. Just a confidence thing. The more you see it time and time again, this euro pound at the moment is exceedingly range bound. So you need to trade it like a range. And the range is actually getting smaller at the moment. As I've been discussing now, the range is more across this range here. In general terms, I'll probably use that high still there. Now, that's getting a bit narrower in its range there. All right, so that's euro pound. It did offer a nice range trade opportunity, both at the top and the bottom. All right. Let's have a look now at the Aussie yen. Now I've got a list of trades. I'm just going to go for maybe, well, I'm not going to go over an hour today. I'll just keep going until we run out of time. If you've got any questions, just drop them in. All right, it's the Aussie yen. And it's not to say when I'm doing my review that I don't learn something about how I've been thinking about the market. Do I need to tweak how I look? Even though I've been trading the market, just because I've been trading the market now for over 15 years, I don't have the mentality that I can't learn something about what I'm doing from month to month. Because I can get maybe stuck in a certain mindset about what I think the market is doing in terms of a trend. And then, maybe I come a little bit unstuck and maybe I have to rethink how I'm thinking. All right, now these two lines down here at the bottom of the Aussie yen, there's the start of the month, that dashed line. If we go to the monthly chart, this corrective rally that we had through the month has all come from the fact that we hit two levels of monthly support. So we hit monthly structure, a monthly low that we traded through, and we did trade slightly below these tops or the first top, but we actually hit two levels of monthly support. And the unfolding uptrend on the day chart that has now been unfolding over the last week is all come from the fact that we've hit structure. So even though the higher time frame trend, let me get rid of that line now, even though the higher time frame trend on this pair is down to a lower bottom, to a further lower bottom, there's a minor top here. I mean, we could be putting in a further minor top here as well this month. But even though the structure is down, and even though the weekly structure here was down when we hit that level, the actual strength of the level, because we hit two monthly levels, has caused a day chart uptrend. And this is where it can get very difficult, because how long will that bounce occur and last for when we hit such a strong level of support? And that's the reason why it's moved up so strongly, is because of the level of support that it's hit. All right, so the way I was looking at this pair through the month was when we had this fib across here and we kind of failed to hit 62, I thought this was time to get short and trade down. But ultimately, we've had higher bottom, higher top. I thought this was going to move down to support, but it didn't. Put in another higher bottom here to a further higher top. This is where it can get difficult when your high time frame's down, but your daily chart trend is in opposition. When does that opposition finish? So depending on how you're looking at it, if you were just poking along with the daily chart trends, there was a very good trade last week. If you were just simply saying, well, I'm going to poke along with the day chart structure, there was a nice 79% retracement here. Okay, you could have traded at the 79 level, stop below the low. That would have eventuated in a very nice move up for you. It is counter to the higher time frame, but it's a 79% retracement pattern. It did set up. If you dropped it to the 4-hour chart, I might just get rid of that fib. All right. If you were concerned that that 79% level wasn't going to hold, you could have waited for price to start to hold. And we start to move up. Now, if you drop it to the 1-hour chart, looking at where price action starts to form in through this area, So if you're looking at, if we go back to the day chart and you're trying to work it out, is it going to get support down here? Because I know the high time frame is down, and I think that may have been the final failure. Well, dropping down to a lower time frame in this area, so to a 1 hour chart here, I draw in some of the swings here. Just want to check the 4 hour chart. See that low there? So we move up. We do a pullback there to that low. So I just want to show you how price unfolded. Because if you just watch price, it will tell you what's happening. Then we actually move up to that candle high, and then we trade down and up in the same candle. But we start to form an uptrend there on the 4 hour chart, which is in line with your day chart. All right, so if you're just watching time frames, then, the 1 hour chart, here are the swings. So that actually moves up to there before dipping is, so let me just draw this. That's that low there. So those are the movements I was seeing on the 4 hour chart, but I'm just mapping it on the 1 hour chart. There's a 79% retracement here to move up. So you start to see a development of trend forming from that day chart 79% level. And then if you're looking at a lower time frame, the lower time frame starts to paint what is happening there. Now, personally, if I was trading that, I didn't trade it to the upside there. But if I was just poking along with the day chart trend, thinking that where, maybe I'm thinking that this is major monthly support here and it's going to hold for a significant reversal, we could still pull back here and then put a further higher in to move up this way. All right, the structures on the day chart's pointing that way at the moment. Is, I wasn't looking this way, I was looking the opposite way because the high time frames are the opposite way. But, there's a perfect 79% retracement there going that way. Now, if you were short that way and you were monitoring that, I was actually short this way and I started to see this coming up this way. I had to just jump out with limited profit because I could start to sense that this 79% level was maybe going to push against my short position. And I couldn't get in down there because it had already passed, but there's a clear day chart uptrend there. And if you're just poking along with the day chart, nice 79% retracement there up to here. Now, of course, things are looking very aggressive to the downside at the moment. And of course, that's the new month. What are we learning about structure from the month before to the current month? Let's just go back to the monthly chart. Ultimately, whatever was happening at the moment, maybe in the month before, it's still against the higher time dominant trend. And the structure here on the weekly chart has not changed in its structure from a lower top to lower bottom. And we're very high up in the range. So all of last month was corrective from that massive bounce from support. But, we've got 79% level there of that range. And in terms of structure as well, we bounced off 2 levels of strong support last month. At the start of this month, 90.51.4, we're rejecting 2 strong levels of monthly resistance at the top. All right. So we obviously have some form of range, strong support, strong resistance on the monthly chart. The fact that we rejected the support and got a strong move up. Now we're rejecting in the new month the resistance side. Or we're going to see a completely different story this month, moving back down. All right. Now, I say this quite often from month to month on the Aussie yen because the Aussie yen loves the 79% retracements. So that was a lovely 79% retracement. to a very profitable target level up here. I don't know if anybody took that one, but it was a very nice setup. And it all came from the fact that we totally failed at a double area of monthly support. So it's maybe worth noting that if you see a very strong failure at a double level of monthly support or a double level of resistance, maybe you're going to see a monthly reversal back the other way. Maybe you want to make sure that you see a complete change on the day chart before you go in opposition to the day chart trend in that case. Okay. All right. So that was what I know. That's the thing that stood out to me, was the bounce from support that started to make that day chart trend unfold over the long term. All right. Let's have a look at the Aussie dollar. Now that's where the month started. Just checking my notes, and just want to put in an area of resistance here, 67.83 from previous month or two ago. And, this is worth noting. This is back in February. So a February high here when price came up early April is more than relevant for the market to respect. You can see through the month of April how it respected it twice there for failure. Now, I discussed this early in the month. When we came up to fail there, I was doing a webinar there when it's failing. It was starting to be down here. And I said, well, we're obviously failing at resistance. Would we get a 79% retracement to trade down? So there was a lovely setup, 79% retracement. Sell, stop goes above the high, targeting the 127 extension. So that all comes from just failing at a significant day chart resistance level. Let the market sell off, rise back. All right, so we get one fail at that level at the start of the month. Back to the day chart. We come up to that same level once more. Did try to trade through. And of course, there's another high here. So we would have that 67.93 level. So 67.93 is very close to 68. The figure. All right. So we've had one failure in that area. Would you get another failure in the same month? All right, comes up, rejects. All right, now I was actually looking for another 79% failure. So price rejected, came down. I was looking for another drawy fib, looking for another 79% failure. Now it doesn't actually come up there. So if you're looking up there for another retest, it doesn't come in. And that's just trading. You can be trading that setup, 79% retracement, and it simply doesn't come in. Doesn't matter if it doesn't come in. It just means that pattern didn't quite set up and you're going to miss, but that's okay. You're going to miss trades just because price doesn't quite do the pattern that you're looking for. That's trading, okay? All right, if you know my 4-hour entry method, which is basically if you have a significant area that you're watching, a resistance or support area, what I do notice here on this rejection candle is that we reject the 62% retracement level. So we could be having a lower top forming at 62. You could take an entry here on the break of the candle for a failure at the 62% rally point here to trade down. All right, maybe that's not that clear to somebody that's not that experienced, but there's 3 highs here that we try to take out, and ultimately we then false break those 3 highs to trade back down. So ultimately for me in this area, I would have been looking at the 79% level up here, which we didn't hit. But that being said, how would you trade that? If you see a nice rejection at the 62 level, you can trade the break of the candle, stop above the high. That would have obviously given you a setup to get in. And that's, it's worth taking screenshots of these pictures, because if you see the exact same sort of thing next month, maybe that's a kind of trade set that you want to take to trade down to the 127 extension down here. All right, now what's been unfolding since then? Just simply, once we put that in, that's a lower top moving down. Now we're getting into the new month, but if I just go back to the 4-hour chart, if you're wanting to be much more of a positional player, so we have this double top failure, we drop down, you could be a 62% trader. You sell at 62 level, stop above the high to take a position. All right, that's that level here, stop above the high. Now, we've had the same thing happen, even though we're in the new month, from that high down to that low, sell at 62, stop above the high. You can see we're already selling off. There's the rejection candle once more. This is the new month, but I just want to prove the point. Things are repeating all the time. That's why if you review and you can see things repeating all the time, previous month, we do go above the 62 level, but look at the candle. There's your rejection candle. There's your entry. Does that candle not look exactly the same here? Does the price action not look exactly the same where we get this drive up rejection, drive up rejection? Is that not the same setup? Same structure setup, 62% retracement, same price action, you get driven up, rejection yesterday, even though it's the new month. There's your entry. Okay. All right. Now this is recorded. It will be on our YouTube channel tomorrow. So if you want to go and review it and take screenshots for your review process, moving forward, do it. All right. Any questions? All right. Euro yen. Now, we've obviously had a very strong move up here on the euro yen. And maybe some of us benefited from the move, maybe some of us didn't. Now, I certainly missed most of that move. And now that I can look at it past tense, I can see why it's moved up so strongly, is that there was a false break double bottom here at this weekly level. And that's the thing that's really caused the run up for the whole month, this double bottom pattern here. At the time when I was looking at price action, I mean, I could, yes, of course, come up with the idea that was a double bottom, but we were rather range bound. And I was looking for a failure here just to trade back down in the range. But ultimately, this double bottom pattern came to fruition. So this actual double bottom pattern set up at the end of March, not into April. But what I wanted to stress was, when you're reviewing the structure, sometimes the structure that's unfolding is setting up over a couple of months, especially here on the euro yen. So it started to set up late March. And if you didn't get across it through April, then you could have obviously missed a large move. And next time around, if you see it, maybe then you won't miss the opportunity, because I definitely missed the opportunity. But there's a double bottom here. Okay. So what I do with a double bottom is I draw my fib across the range. And if we break the high, which is here, we could go 200% of the range up. Now, where's price stopped? At the 200% point. And now we're having a significant sell-off. So what we've had occur is a significant weekly chart double bottom that's been driving price action up for the whole month. And I actually did look in here for a trade, and I'll show the setup, but ultimately then we broke above here. And then the whole double bottom has manifested itself to, a perfect double bottom price projection. All right. Actually stopped to the pip there pretty much. And now it's selling off. All right. Now, whether or not we're going to get a significant sell-off into the new month, but knowing that we've now had a long-term double bottom pattern come potentially to completion, then if we start to see bearish price action unfold from this point on in the month, That would make sense, wouldn't it? All right, now trade setup that I did discuss in one of the live webinars was up here. So forgetting that there was maybe a double bottom here, and I was looking at this potentially just to fail at the top of the range to trade maybe back down to the bottom of the range. It was rather range bound. All right, now in this area, we come up to the top, we sell off. So if we drop it to the 4-hour chart and we go back in time to the area, which is here, then, you know, I just look for the 79% retracement back up. We drop down, we trade the 79% rally, stop above the high. So there's your entry just there. Stop goes above there. You can see it meets the target of the 127 extension. So there was a nice profitable short there from the top of the range. It does not meet the larger range of failing here to trade all the way down to the bottom, because ultimately price moves the opposite way. And yes, the higher time frame weekly chart double bottom comes into play. Aletha may ask me, can I circle the double bottom for clarity? Not seen on the day on the 4-hour chart here. The double bottom on the day chart is here. It's at the 139.54 weekly level. Candle. The first bottom is on the 10th of February. And then there are multiple bottoms here in late March. Okay. And the pattern. You can take any one of these lows. Take the first one, doesn't matter which one we use. There's the pattern. Now, of course, there's lots of stabs down here trying to go through it. But ultimately, there's the double bottom. And if I draw the fib back in, there's the perfect 200% price projection up there. All right. All right, so that ultimately that pattern, which I wasn't really thinking about myself, I was thinking it was more in a range, but ultimately that's the thing that's driven it up. And now, of course, that's completed and we could, you know, maybe get a nice pullback. And Matthew is saying the risk resistance is higher from when you look left to right. You mean support? Are you talking about this area here? I'm not sure what resistance level you're looking at. You're talking about this resistance. I don't know quite what resistance level you're looking at. This resistance here, or this here. Well, that top there is only a fraction above that area there. So when price gets to there, the fact that that high is at 145.66 and that high is at 145, that's at 145.56. That's at 145.66. The fact that price goes through there 10 pips doesn't change the trend. Because if that was true, when price went through that low there, that would change the trend to down, and quite clearly it doesn't because it moves back up. So I don't know if I'm quite getting your question right, but we're talking about that high to that high. To me, that's close enough for equal highs. It's 10 pips. All right. So yeah, 10 pips above is equal. Is when you're talking about a day chart level, if we're talking maybe like a 1-hour level of support or resistance, yeah, you kind of want them equal. But if you're looking at a day chart high or a weekly chart high, 10 pip difference, to me, it's still equal highs. All right. It's just a false break. It's a few stops going off above the high to move it through. All right. So I don't know if anybody got that double bottom that was happening there that has actually powered this all the way up, but retrospectively, it's really a missed opportunity, you know, although there was a nice little short opportunity down from the top of that range in the short term there last month. All right, just checking my notes. Let's move along to, you know, some pairs haven't been that easy. And one of the things that I've certainly made a note of for myself is, and I'll talk about it on the euro dollar. So this is where the month started. Now, from a very, very high time frame perspective, this is still in a downtrend. There's a range of the year. We're actually holding at the 79% level. All right, but ultimately, you know, the weekly trend is up and the day trend is up. It's all going in opposition to what we had last year, and the monthly trend still being down. And there's still a question at the moment, is this topping out up here or not? Now, the start of the month was here. Now, of course, I've got a number of people on here today. We're all living in, maybe some of us in Australia, some of us in the UK, some of us through Europe, Asia. We're all living in different parts of the world. All right. And one of the things that I've noticed is the way price has been unfolding as I've been looking back over the month is when I'm looking at the market, often I'm seeing failure at resistance in this uptrend. So on for example, the pound dollar and the euro dollar. And yes, we're seeing an uptrend, but we're at very high levels. And often when I'm tuning in on the charts, prices dipped down in the New York session and then move back up. So when I'm presented with the charts, price is at resistance and I'm seeing a very slow trend, and I'm looking maybe to trade down from resistance to support. But the slow trend is actually on the upside. So what I'm having to take maybe note of at the moment is just, you know, double questioning myself what the trend is. And just because price is at resistance when I'm doing my analysis in my trading day, is it the best time to be selling? Because, you know, that's where price is. You know, it would be great when if you're seeing an uptrend, it's always great that price is at support in your time zone, in your trading, so you can trade up from support with the creeping underlying trend. At the moment, we've got a very slow creeping underlying uptrends. And like I was saying on the Aussie dollar trading to the downside, you know, if all you did on this pair at the moment was have a positional play with the overall structure on the day chart, is, you know, here we have almost a 79% retracement. But if all you were doing is buying the dips on the day chart at 62 level, trading up to 127 extension there, that would be profitable. All right, there's one example. Then we have another example. All right. And realistically at the moment, here we have another example of price pulling back to the 62. So there, if you were just following the creeping structure of trend there, even though we know that the highest time frame trend is down, with a simple strategy of trading the structure, pull back to 62, buy, stop goes below the low. There's 3 trades there at the moment that are all have or are currently offering profit. All right. But you can get lulled into the idea. And, you know, I've been focusing on this top to the left at 110.33, which we know I said today we could hold there today and trade down, because we have been doing that for the best part of a week. And we're only trading at 37 right now. So give it another hour, we could be below 110.33. Is we have this week and last week been failing. We've been moving above and failing. And all my analysis generally has been, when I'm doing it in my time of the day, even though I can see the structure is in a long-term, very slow uptrend, price keeps falling down from resistance. And when I'm doing my analysis, it's always on the sell side at the top. So, you know, when I'm looking at how I'm going to trade that pair, my options are to do nothing or sell because it's hitting resistance and continuing moving down. And then I wake up the next morning and yeah, it's traded down through the day. But when I wake up the next morning, it's come down to the lower levels, found support and come all the way back up. But ultimately, we can see this is in an uptrend. And if I'm, you know, the current market that we're seeing, if I'm seeing anything, is that sometimes where I'm trading isn't necessarily always the best place to trade, but it's the option you have in the time of the day. So I might need to just step back at sometimes and go, look, maybe I need to wait to see if I can get an opportunity to trade in line with that day chart trend, but I'm going to have to wait for a dip. But unfortunately, for most of the month, most of the dips have been happening in the New York session, you know, when I'm asleep. And through a month, through this week here, all these dips were happening in the latter end of my day, and price is starting at the top in my day. But ultimately, you can start to see here that we get a, you know, structurally here, we start to get a rise of lows here before we can ultimately try to move above 110.33 there before fading down. So all these down, this is my time of day when we're moving down this way. All right. All these upward moves though keep coming in a lot of the time. You know, this low here yesterday came in after midnight when I'm going to sleep. So this upward move here is all when I'm asleep. And where's price now? It's back at the sell side of the market, isn't it? But ultimately the trend is ever so slightly up. So that's what I'm learning from last month, is that sometimes the market's not offering me the best opportunities just because the actual buying of the dips with that underlying trend are actually happening in the New York session. But I'm asleep in the New York session. All right. So, you know, doing a full analysis of what's been happening, I've actually traded down from this level multiple times through the month and made some profit, but I probably would have made better profit if I was trading to the upside. But the upside opportunities are when I'm asleep. All right. So that's what I wanted to say on that pair. You know, taking a very long-term approach, trading the day chart structure there, 62% retracement levels, has worked very nicely. Slow process of making some consistent pips. It has offered pips to trade down intraday from the simple resistance level of 110.33. I'm not going to go through every little opportunity that you could have done, but ultimately, depending on what part of the world you're in, you would have fared better depending on where you live, I think, on the euro dollar. And the same with the pound dollar, the same kind of thing's been unfolding there. Now, how are we going for time? I want to hop over to the New Zealand yen, because whilst this looks like a bit of a dog, it has actually performed very nicely. Even though it's so range bound, it's performed very nicely if all you've been waiting for is the outskirts of price. All right. Now I've got this weekly, let me just double check. It's a daily level. I had this daily level drawn in through the month. There's the start of the month. So we come up and we fail. We drop down. Come up again and we fail. And I think I had started to put a line across that top. Let's just get rid of that dashed line, because that's those. I just put it there so I know when the month is, but it gets confusing. All right, so we started the hold. We started to hold here, and we're false breaking this area here. All right, and what I wanted to show you is the actual trend on the weekly chart is to a lower bottom here, and we're coming up to 62% area in here as well. All right, so whilst that's a higher top, we moved to a lower bottom, and we started to stick around the 62 area. Here it is. And we get all these rejections up here. Now we've got resistance here. we form this resistance high here, and we stab up once more here, and we fall down. Let's just get rid of that larger fib. You know, we've come up, countless rejections in here at this area of resistance here. All right, and then I said during the month, this is your resistance area. And whilst price action doesn't look very nice, there's the final high there, 79% level on the move back up overlaps very close to 83.53. So if you sold 83.53, you could have traded down to 127 extension here. Now, as well, there is a smaller little swing in here. There's another little swing in here, which will be seen on a 4-hour chart. Let me just make sure. All right. So the first one actually from that high to low. Right, take your 79% entry there. Obviously, it goes up a little bit higher. Hang on, let me just double check. I'm in the wrong place. Apologies. All right. So let's just back up. There's the first trade. All right, we come up and down. All right, I'm just need to refresh my mind. Then there's a small entry in here that gets you down to the same level. Is this little swing in here. So as well, after you had the first opportunity of getting at the 79% level, and my resistance level was here. All right, there's the first opportunity. Let me just color it in. Now using the same fib, so we come up to the 79. There was actually another opportunity here. You could just use the same fib and take a trade in here as well. However, what I wanted to show you was when you're seeing price at resistance up there, so we get 2 stabs in this area, 1 stab, 2 stabs at your resistance level. Then on the 4-hour chart, there's this area here. So we move back up, we drop, we come up. On the 4-hour chart, there's a 79% setup here. There's your 79% level here. So we fail at resistance, we fall down. See these patterns happening all the time on the 4-hour chart. We will come up and hit the resistance level, we drop down. Then I'm looking for the 79% retracement, which often overlaps with the resistance level. There it is. And then it drops down. All right, so there's a 4-hour entry there. There was a day chart entry. It all comes around just from keep seeing price action failing at that level. It drops down on the day chart, rallies up on the 79, has multiple tests. Back to the day chart. Multiple tests in here to move down. All right. We had a similar affair in the previous month from this area up here. This area here to trade down. And where are we at the moment? In the new month, we covered this last night. There's a weekly top. I think we've got 2 weekly tops in here. Yes, we do. We just traded up this month to 2 weekly tops here. We're rejecting a known area of resistance this month. There was last month's known area of resistance that was forming. All right, there was a very simple trade to trade down from that area. This is the exact same thing in the new month. All right. All right. Let me have a look at Cody saying, can we look at dollar, yen, CAD, and gold? I can't look at all those three. I've only got 10 minutes left. I can have a look at dollar yen from last month's perspective because there was a nice setup on that one. So let's just finish with that one. All right. Well, hopefully this is making sense to everybody, that you have to get a very good grasp of what the structure of the market is, where support and resistance is, and what is then telling you the story. Because whilst this looks quite horrible price action, that's just resistance failure. 79% fib retracement entry. Up here in the new month, it's just resistance failure. Now I don't know what this is going to do for the rest of the month, but maybe it's going to come down to here. And you know, that resistance area has been tested twice over the last 2 days to move down. All right, lots of people asking me to look at things. I've got time to look at one more thing. So I'm going to take the first instrument that I got asked, which is the dollar yen. If I have any time after that, I'll get to the next one, but I'm going to finish at 8 o'clock this evening. So, all right, so the dollar yen, what has been nicely unfolding is there's a big head and shoulder pattern forming here. All right, that's been forming for a couple of months now. And from that, that's the thing that's been driving price up. And on the day charts, the new month was here. On that larger head and shoulder pattern in this area here, we formed left shoulder, head, right shoulder. And you know, the right shoulder forming there was early April, first week of April, has been unfolding all the way up. Getting in, you could just trade the opposite to the left shoulder using a fib. If you're going for, let's just drop it down the Forex chart to get a closer look here. And I'll just all right, that's the left shoulder just there. Just so we know the level. Now price doesn't quite get down to the left shoulder. Doesn't quite get down to 79% fib level. But if you were trading that as a pattern, hopefully if you couldn't get in down at 79% level, you clicked in at the 62 level to trade that pair up. All right, it was a nice head and shoulder pattern forming on the right hand side here, as the larger time frame is always showing you a head and shoulder pattern. All right, so that's the thing that's been driving it all month, is there's that head and shoulder pattern on the back of, or even a larger head and shoulder pattern on a weekly chart unfolding through the month. All right, so as I look at this pair at the moment, you know, the bigger head and shoulder is here. Head, right shoulder. And then we have a small one there. So that bigger pattern that I'm showing you is going to really come to fruition. We're going to, you know, as we look at what's going to happen for the rest of the new month, we're already in the early phase of the month, is this larger head and shoulder pattern still running out. We haven't met the 127 extension for the profit target of that bigger pattern. So if that's going to continue to run out, we've still got more upside potential to go on that pair. So structurally at the moment, moving into a new month, we still have that larger pattern unfolding. All right. All right, Cody, so that's one for you. Slav, you want me to look at gold? Quickly look at gold. I'm not going to look at it from last month's perspective. We can look at it right now. It's been very difficult for the whole month. We've been commentating on this. I've been commentating on this through the whole of the month. You know, it's back above the 2000 level. It's potentially, even though it's been a very difficult price action, it's potentially here putting in another bottom to move up. Now, of course, we probably need to see a move away, because when we get the FOMC statement coming out later in the day, you know, this could just sink straight back down. This little area of consolidation, which is a bit of a triangular affair, we really need to get away from this area, because this area has been the consolidation area, the contentious area. And it is worth noting, I'm just seeing very similar price action where it got very difficult in that area. It broke up. And now it's fractionally higher, it's doing the same thing. So all we might get from here is another break up, right? And then we could just see again more of this kind of consolidation. So potentially what we might see is a similar kind of thing here. We break up, might get a little two-way thing going on there, and then we're back into consolidation. We're very high up at there at the moment. So I still don't like gold there at the moment. You know, price action is not nice at all. That big move up yesterday could be a complete false break. That could be a whole bunch of stops going off. Short, people are short, knowing that we're very high up, and we were fading at that 1998 level. And that big impulsive candle up could have been just a whole bunch of stops going off. People going, I'm wrong, clearing their positions. Do we see any follow through? So, you know, we need to see some clear price action. It's just a nice trend would be, you know, like this up through here. Can a nice trend unfold? That's what you want to see, right? And you're waiting for the major triple top. Yeah, there is, of course, you know, that's the kind of day chart look. Of course, from the biggest structure look at the moment, the big question is, does the bigger structure, the monthly there, we're obviously moving up. So, you know, from last month's look, the question is, are we forming a triple top? Now, with that monthly rejection candle, what we could be looking at is quite simply, this is the range of last month, which I'm drawing out from low to high. I know that's not the normal way you draw a fib, but what I want to know is what, you know, that's the candle of last month. That's the rejection candle of last month. I want to know is, where's the 79% level of that range, just as a range. I know people will draw a fib from here, maybe time to here, but I'm using the range of the month. All right. So quite clearly, if we think that is a top, final top, and it's a rejection top on the monthly candle there, and we can retrace back up inside the candle for some of the month before then selling down, you want to try and sell it as high up as you can within the range of that candle. So of course, the 79% levels here, 2027. You can see there's a top over there. There's another top there. So if I just link those tops together, now that area there, which is 2027 to 2032. All right. And, you know, so that area there, what we can also see is there's an imbalance in here in the same area. And there's an imbalance there. It's just starting to get, you know, it's gotten filled from the price action move up yesterday. So the rest of the imbalance is about there. So at the top of that imbalance there, Slav, that might be a nice level to watch. If that rejection candle is going to hold for decline. So, you know, we'll wait and see what comes over the next few days. We've obviously got the FOMC tomorrow. We've got the job figures on Friday. Where does the market sit after that? All right. And you're saying you meant a triple top on the weekly, not the monthly, at 2070. At 2070. All right, so you're actually looking all the way up here. Price to get all the way up to 2070 level. Well, yeah, if you can get there, but of course, I'm just looking at the monthly candle of last month and going, well, that's a rejection candle. So have we actually put the top in? So we may have put the top in, or yes, we could then simply be watching those very high levels for a further rejection. You know, do we hit 2070 this month, and then can we reject? That's of course another opportunity. Of course, to get to that opportunity, we have to get past, you know, this area. So that's, you know, that's an area to watch. If we start to falter there, maybe the opportunity that you're looking at isn't going to come around. But yes, the double tops up there at the moment, we could form a triple top up there for sure. Yeah, well worth watching. All right, everybody, it's 8 o'clock. I know some other people have asked me to look at things, but I'm going to call it a day at 8 o'clock. I don't think we finished yesterday till like 8:15. I want to try and keep this is recorded, so I want to try and keep it no longer than an hour. So if I haven't got to your instrument, I apologize, but hopefully you got some value from that. How to look at the market past tense, learn some lessons that you can take forward. I've learned a few lessons from last month myself, even though, you know, I'm well long in the tooth in my career as a trader. I'm always learning about how I can maybe look at the market a little bit differently this month to last month, like I was saying on the euro dollar. Whereas every time I'm looking at it, it's always at the resistance. But maybe the better opportunities have been when we're back down to support because of that underlying move up. But, you know, it's a 24-hour market. I can't be up 24 hours a day, although I will be up this morning very early, unfortunately. All right, everybody, thanks very much. Hopefully you can move some of that forward to this new month. I will review the market tomorrow and see where we're at in terms of the new levels and structure that's forming after the FOMC. I will move forward from there. All right, everybody. So thanks very much for all your questions coming in there and your attendance. Hopefully you got some value from that, and I look forward to seeing you next time. Thanks, everybody.